Today is Thursday, June the 11th, and this is going to be one of those days that's pretty easy to talk about. Everything was red. We had two exceptions, Kroger Foods and Allergan. If we look at the all the stocks that FinViz tracks, you can see all the sectors were red. This is a Chinese stock here, and you've got some biotechnology stocks that were green, but pretty much blood in the streets. And if you look at the world, there you go, red everywhere. This is a pretty useful tool. So let's just take a look. You've got your map. This is bubbles. This shows you the relative size of the drop. The colors indicate the sector. And this is the zero line. So only one stock in the S&P 500 was positive. And now that translates into the McClellan oscillator of well down below the zero line. So let's bring in our trend chart. And here we've got 2 points of a trend. And we would like to see a bounce for any bullish strength. If we continue down below and we lose this point, who's to say we can't go down and have some more of this ugly coronavirus stuff again? And you know what happened the last time that happened. So today apparently it was blamed on two things. One, fears about the coronavirus coming back again. And if you've been listening to these videos, we've been talking about that almost every day. And the other thing was the Fed statement saying that they really don't see any improvement until 2023 because they're not going to change the zero Fed rate till the end, at least until the end of 2022. And they don't see the unemployment rising or getting below 9% for the rest of the year. So that was all that the market needed to hear to confirm the fears that we pointed out yesterday on the charts, which were all of the stocks that had exceeded the Bollinger Bands. And we see on the SPX, we're well within the Bollinger Band now. We only had Monday where we popped out, but if you look at the Dow Jones, again Monday, look at the NASDAQ yesterday, we popped out of the Bollinger Bands. So 90% of the trades stay within the Bollinger Bands. Only 10% of the trades exceed or close above the top line. And this was the overbought line. So we also hit this Fibonacci yesterday, which we pointed out, which is a minor Fibonacci, but nonetheless, it's just a confluence of two bad things. One, a new market high for the NASDAQ. Two, a minor Fibonacci where traders could be sitting. And then three, above the Bollinger Band. So Bollinger Band traders and ETFs that trade on Bollinger Bands, they're going to make automatic decisions based on this kind of thing. Now let's take a look at Apple. Now in a second I'm going to show you my own book. And I'm going to show you the nice feeling that it has of being able to always offset your stocks with short calls. And this is what I'll explain it at the end. Apple, well below its Bollinger Band, and it just had to come back in, and certainly it did. And it also hit the 127.2%, and that is a solid Fibonacci number. That is a major Fibonacci. Not as important as 1.38 and 1.612, but it's right up there as a important Fibonacci. Caterpillar had exceeded its Bollinger Band on Monday and was pulled in. So now it's right in the middle. It's also fallen below the 200. Home Depot had a beautiful drop. If you are short the 245s and the 250s like I am, this is a beautiful drop. And with Caterpillar, I'm short the 130s. So when Caterpillar was getting up to levels of 130, which it was, not coming at me here, I wanted to see Caterpillar pull back and give me an opportunity to burn off some of my short calls. I'm going to show you how that works in a second. What else do we want to look at? Whirlpool was not up $1.36 today. By any means, don't know why it says that. How about gold? Did gold do anything? The gold miners did not. So it was just generally an ugly day. Tomorrow we're at 3,000. That's a critical point. We've closed a few gaps that we said that we needed to close. We closed this one. We closed this one. We created this one. We're in danger now if we go down and we touch the 200 tomorrow, and the 50, the 200 and the 50 are confluential here, coincidental. This is a bullish cross, or a golden cross, where the 50 crosses above the 200. This would indicate bullishness. It's inevitable that we're going to come down and we're going to test these two, the 50 and the 200. Let's overlay the Ichimoku on that, and we've got a long way to go before the Ichimoku cloud on a daily basis takes over. But on a weekly basis, now we've fallen into the cloud, and the Chiku span is going to look for support right here tomorrow. So let's draw that line, and let's see where that line appears on a daily basis. Well, for one thing, that line appears at where we closed on February the 23rd. And after that big day, which was the beginning of the coronavirus suffering, we continued to plummet down. Could happen again. On a daily basis, where's that green line? Look at that. That green line is right where the 50 and the 200 are. Well, of course they are. I'm sorry, because I didn't draw them there. I drew that with a Chiku span on the 200. That is also where the 50 and the 200 sit tomorrow. It's going to happen. We are going down to 29.61. Let's put a marker there to say that we talked about it. Today, the Chiku span stopped on the 200 SMA. Coincidence? I think not. Again, the Chiku span is pretty darn important. So now I'm going to show you my book. And here is my Apple positions. I have 600 shares of Apple. I am short the September 18th 300 calls and the 310 calls. I bought these way back in March. So let's take a look at this. I will tell you when I bought these, or when I sold them actually. I sold these calls on March the 27th for $9.20. You can see the trade price there. I sold the 315s on April the 17th, sorry, the 310s on April the 17th for $11.60. So today, Apple lost $9,000 for me on my shares. This is a stock that's paying me a pretty nice dividend. That's why I like to hold on to it. Plus, I just think it's a value stock. But my short calls picked up 6,337 of that loss, giving me a total loss of the day of under 3,000. There's nothing I'd like better than to go down to 310 or 315, 310 or 305, because that's where 300 or 310, because that's where I've got my short calls. All of this gain that Apple's experienced, I'm not participating in. So I'm really well sheltered there. Let me show you another one, and that would be Caterpillar. So this is Caterpillar. I have an $8,000 loss today in Caterpillar on the stock, but my shorts brought me back $3,300 of that. And because it was getting too high for me, and my shorts are November 130s, this is really playing into my strategy. I'm okay with this. And finally on Home Depot, I rolled some calls yesterday into next week, but I've got the 245 calls that expire tomorrow, and the stock is currently trading at 240, which means that the $2,600 I picked up today is going to be mine, as well as anything left in it. And there's still $1.05, so there's $300 there. So most of it is already earned. I can sell next week's 245 calls and still be just happier than heck. This is how I make money. I keep the same stock. They're all dividend paying stocks. Now, Home Depot is a recent addition to my basket, but I've always had Apple, Caterpillar, Whirlpool, AT&T. These are stocks that I've always kept in my basket, and I've played in and out of them, but mainly in order to capture the dividends, but I'm also keeping the short calls. And this is a day when the short calls pay off in spades. If I thought the market was going to turn up tomorrow, I would close all those short calls and I would be able to grab that $2,600 profit and the $6,000 profit on Apple, but I don't think it's going to go back up. So I'm going to continue to be well protected with my short calls and keeping my strong stocks for the future, because Apple, Home Depot, Caterpillar, AT&T, US Bank, these are my main holdings, and Home Depot, and I just want to grow the dividends. By the way, Caterpillar has announced a dividend today, and it's $1.03. So if you look at Dividend Investor, I must have closed it, but I had the Dividend Investor open, and it shows that it's going to pay off in August $1.03. Keep the dividends, keep the premium from the short calls, and just hold on to the stock forever.